to talk to you about the pig industry. I've got a presentation that I've put together, which is hopefully everybody can see on the screen now. There we go. Let's just get it up. There we are. And I'll probably just go off. I'll stop the video so it doesn't get in everybody's way. So what's on the agenda? Well, just a little bit about background to the industry first. Just some statistics and to give you a feel for those who are not familiar with the way in which the industry operates. And then I thought we'd take a look at the market. So what's driving the market along at the moment? And boy, there's plenty going on. COVID-19, the impact of China and the USA, all having a tremendous impact on the market at the minute. Then I'd like to just give you some thoughts about where the market's headed over the short term, so the remainder of this year, and some thoughts about where we might be in 2021. And part of that is around Brexit. So I've done a little bit more detail around Brexit, what we know at the moment, and what we don't know, which is still quite a significant amount. And then I'll just try and draw some conclusions. So hopefully you'll find it interesting. I was thinking on taking about the next half an hour or so to do that. So by way of a background, for those that, as I say, who aren't familiar with the market, it's big. If we look at retail pork and pork products, that's one thing we should be clear about. Pork is a very broad-ranging meat in the marketplace. You walk around any supermarket, you'll find pork, bacon, ham, sausages, pork pies, black puddings. It's a big range, and it's worth a lot of money. So around about 4.2 billion in the year to October 2019. That's just retail. On top of that, food service is worth about another 1.5 billion in terms of value. That's the value of the pork within the overall food service market. And then exports, which are becoming increasingly important, are now nearly up to 600 million, just short of that. So, and that's grown very quickly in recent years. So it's a big market, but we don't have it all to ourselves. The UK is about 59% self-sufficient. That's the estimate for this year. And so we obviously are a substantial importer of products. And there's a difference between self-sufficiency and market share. Obviously, self-sufficiency is just production compared to consumption. But actually, if you have to take off exports, if you're looking at what's left in the UK, and because I mean, obviously you can't eat it twice. So when you take off exports, which are that valuable amount I mentioned earlier, then actually the UK market share in its own market is only about 41%. So just over that 40% of all the pork, bacon, ham, and sausage that you see on shelves, that's all we've got. 60% of that is going to be of our market, if you like, is imported, and so that's going to be particularly important when we get to the discussion about Brexit. But actually, it's been quite important already in terms of the impact of COVID. And the reason for it, why we have such high levels of imports, is because we have a very unbalanced demand. If you look at what British consumers like to eat, we love the loin of the pig in whatever format that comes. And that can be as a fresh loin in terms of pork chops, but more particularly in terms of loin bacon. There was some work done a couple of years ago, and it suggested that if you took all the demand for loin and loin products, then we have a demand in this country for about 21 million pigs worth of loins. And we only slaughter about 11 million pigs. So we have to import those extra loins to satisfy the demand from somewhere. Leg meat is both chilled and processed. So in other words, leg meat that gets made into ham or ham that comes in already is similar. Not quite as much. Again, on the same calculation, it's about 13 or 14 million pigs worth. So we have this excess demand that we need to fill for those specific cuts. That's why we have this kind of unbalanced demand. And that's why we end up importing meat. We import it as primal cuts, not as carcasses. So we just import the loins that we want or the legs that we want. And when it comes to exports, we've got a surplus of particularly shoulders and for most of the year bellies. And so we export those and we will ship those off to the rest of Europe. We also, our cull sows, they all go to Europe. About 90% of all the sows that are culled at the end of their productive life will end up going to the EU. And as I've said earlier, we have a growing export market, and that has been growing very rapidly, and it's mainly on the back of trade to China. And China we'll talk about that in a little more detail in a moment. In terms of the structure of production, we have about 420,000 breeding sows. We used to have a lot more than that. Back in the 1990s, it was over 800,000. But now we've settled down to a reasonable level around that. About 60% of those are in conventional farrowing crates, and about 40% are outdoors. And that's quite unique. There are very, very few, if any, production markets in the world that have such a high percentage of pigs that farrow outdoors. We don't then continue to take those pigs through to finishing outdoors. That rarely happens. But we do have a very interesting and quite balanced way of producing pigs. So we tend to finish about 40% of our finishes on slats, and you can see a picture there on the right-hand side, and around here. So that's basically on slatted floors where the dung just drops straight through. And about 62% of finishes are on straw and other substrates. So we're mainly in that particular type of production. Average carcass weight is about 85%. Sorry, that should be 38 and 62. I beg your pardon, the two numbers don't add up. Average carcass weight is currently about 85 kilos. We have been increasing carcass weights quite steadily over the last 10 years or so. And that's producing more and more, obviously more and more meat. If we look at performance, our performance is slightly below average relative to the rest of Europe, because mainly of our breeding herd performance, mainly because of our outdoors. We're averaging around about 25 pigs weaned per sow per year. Indoors, doing a lot more than that. Outdoors, not so good. And we have some very, very good top third producers. This was figures for last year, about 30.4. It'll be higher than that for 2020, I'm sure. And if you like, the reduction in the number of sows that we've had has been compensated a little for an increase in our productivity. So we're producing more pigs to heavier weights. In the finishing herd, we're averaging around about 800 grams a day on finishing, which is pretty good, and it's up there with the rest of Europe. So our challenge is more on the breeding herd side, and that's more to do with the way we produce pigs, and obviously the pressure we have for higher welfare production in this country. The industry itself is very highly concentrated. If you look at the census data across the whole of the UK, you'll see that I think they record somewhere in the region of about 10,000 pig producers. That includes an awful lot of very small ones. If you just take farm assured through whichever farm assurance scheme that you take, mainly Red Tractor, but there are one or two others. There's only about 1,700 farm assured farms, and they account for more than 90% of production. And within that, there are 16 farming companies. And by that, these are mainly large producers, family businesses, although there are one or two corporate businesses in there that I'll talk about in a moment. Those 16 companies account for over 50% of slaughter pig production. Now, we're not like the US or some parts of the world where you have enormous farms in places like the Midwest. We do on what I'd call a distributed structure. So in other words, we'll have maybe, say, an outdoor unit, 800 to 1,000 sows on a single farm, but that'll be repeated in several parts of the country for one company. So it'll distribute those farms over a broader area. And the same applies to furniture. And as I've said, in terms of corporates, 3 of the 4 largest slaughter companies are also major pig farmers and have been for many, many years. And that's a trend that's likely to continue. I'm grateful to my friend Simon Davis from Meadow Quality for this one. These are his estimates for last year of the various routes to market that are taken. So you can see on the left-hand side, the processor owned at 31%. Simon did this last year. If you can update that now, that's nearer now about 33%, I would say, through 1 or 2 acquisitions that have taken place. So about 1/3 of the slaughter pigs in the country are owned by those 3 processors. Then you have these larger independents. They are this is how they're selling their pigs, not how they're producing their pigs. So the larger independents will sell directly to abattoirs, often through groups, and so they'll still find a benefit of doing that. So these are producer groups. So these are people like Meadow Quality, Thames Valley Canback, Yorkshire Farmers, etc. And they account for about 41% of the total. And then smaller independent farmers who are dealing directly are only about 11%. So it's quite a concentrated route to market. And at the end of the presentation, we'll just talk, if you're interested in pig production, then I've just got a few pointers about potential routes to market that you might want to take and reasons or things to be aware of. Let's talk about where we are with current production. So this is a graph that's produced by AHDB, and it's a very, very useful one. And what you've got, the bars here, represent AHDB's estimate of the cost of production. And you can see a couple of things actually happening with this. The stuff down the bottom, these bottom 3 bars, while they'll vary a little bit, they tend to be quite stable. And these are things like other variable costs, labor, and buildings and maintenance. I'll talk a little bit about that in just 1 second. But the biggest variable is feed. And it's both the biggest proportion. And as you can see here, there are times when, this goes back to 2017, there are times when you've seen an increase in feed costs, and those push up total costs. And that's the major thing that actually pushes them along. The line across the top is a thing called the APP, or the all pigs price. So that's an average price produced by AHDB, and that includes both indoor and outdoor produced pigs that are sold in the market. Obviously, outdoor produced or outdoor bred are going to have a premium, and so it's a combination of the 2 together. And obviously, you'll see if there's a gap between the 2, there was a profit, and where the price fell below the cost of production, obviously there was a loss. Now, the one thing you need to be just clear about, and the AHDB figures are very clear about it, and please take a look at them, because it's got a lot of information about average performance as well. This figure here, the blue one, is buildings, maintenance, and finance. That's quite a large figure. And what they do with that calculation is they actually put a figure in for depreciation as if all the assets were brand new. That's a sensible way to do it if you're running a business. But what it does mean is this is not the cash cost of production. This is actually a total economic cost of production. And so therefore, in terms of, if you like, any profits, it represents a very, very well calculated net margin that actually includes the full economic cost of pig production, including the cost of your investments. So it's a very, very good thing to look at. And as you can see, if we just reduce it now to its margin on the same kind of basis, and what we've done here is we've taken these, or AHDB have taken these, and they've just taken that gap that you saw on the previous graph. And you can see here, this is the cost, this is the net margin per head for a finished pig, finished slaughter pig, and as I've said, around about 85 kilos. And you can see here that particularly through 2017 into start of 2018, profits were very, very good in 2017, into a break even around about the kind of first half of 2018. Then, mainly because of that increase in feed costs in the second half of 2018 and into 19, there were some losses made in the industry. But once we got into Q2, quarter two in 2019, they have continued and profits have continued to go up. This is the average for Q1. They haven't published for Q2, but I would estimate that that's going to be pretty similar. So you can see around about 12 to 14 pounds a head net margin on a full economic cost basis. So as you'll see here, and like they say in stock markets, the past is no guarantee of the future, but in the past, it's been a pretty good run for pig producers in the United Kingdom, or in Great Britain, I should say, to be very specific. So, but the market's been pretty good. Looking now in more detail at the market, I'd just like to spend a few moments on that. And it's been remarkable. As Ken was saying, I've done this job one way or another for 40 odd years. And this period of time that we've seen, I've never known a more stable pig price than we've seen in the UK. And we'll talk about this in a little more detail. But these are both done on the same basis. This is in pence per kilo deadweight. It's a thing called the UK and EU reference price. So this is the price for the EU 27 in the grey bar, and this is what's happened in the UK. And this is running back to the start of 2019. I could have taken it back a little further. But as I said, profits were reasonably good in 2019. And you can see we had a pretty stable market. Price was averaging around about 140 pence a kilo. The EU market really took off in 2019, from around about just before the second half of the year. And we'll talk about that in a moment. Well, the reason for it principally was we started to see a fantastic export market in China that I'll talk about in a little bit later, and a bit of an increase in demand as well. Supplies had been short or shorter due to some previous poorer profitability. But you saw the EU market really took off. And what happened was the UK was a little bit slow to pick up. But we do have, this is a manifestation of a slightly more stable market. But as that EU market increased, very volatile week to week, we caught up with that particular market. And it kind of dropped at the start of the year, then it picked up again. I think everybody thought the bubble had burst, particularly with demand in China. And so into the new year, we saw this drop. But in that first quarter, the Chinese were back in the market. They were buying quite strongly. The EU price shot up again. That dragged us along with it. And then, of course, this is kind of mid-March. And you can see here that this is the point at which COVID actually struck the market. It took a couple of weeks for it to filter through into the pig price. But once it did, a combination of things, that and the Chinese market, for prices, not for volumes, caused a very sharp drop. And that's, in my view, there's a bit of kind of the bubble bursting, I think. There was a bit of a rebound. It went up, it fell again. It's now in the last week has been sort of reasonably stable. But you can see that quite volatile. So going from about 116 pence a kilo, got up to over 173, and it's now down to below 140, about 138 or thereabouts. And throughout all of that, and don't forget, as I said earlier, 60% of everything all the meat that's sold in our market comes from the EU, imported from the EU. And throughout all of that, we just stayed stable to slightly rising. And I think that's a remarkable performance. And it says a lot about the way in which the British industry is organized at the moment. That gap between ourselves and the rest of Europe is currently sitting at about 21 pence a kilo, which is quite a sizable premium in our marketplace. So what's been causing all this? Well, COVID-19 is the first and probably the biggest disruptor in the market. As I've said, we've seen the average price fall sharply since March. In fact, it's now down about 20%, not 17%. And it's mainly a reaction to the spread of the coronavirus. And that's been on both demand and supply. So firstly, on demand, demand's really been disrupted because of food service, the food service sector. Obviously, restrictions that were introduced in terms of people's movements, and we all know that eating out kind of more or less ground to a halt. And the thing is that as far as most demand is concerned in continental Europe, they're quite heavily reliant, more so than we are here, on the food service sector. If you went to somewhere like the US, they're even more reliant on that. And estimates I've seen suggest that over half their total consumption was in the food service sector. In Europe, it was probably 40 to 45%. In the UK, in terms of volume, it's actually quite low. And we'll look at that in a minute, because that's been one of the contributing factors. But we saw this big disruption to demand that came through, and it's had quite a big impact. But we've also seen a disruption to supply, and that's been the most peculiar part of this market. It's almost unique well, it is unique in my lifetime of looking at markets, because what you saw was a number of countries actually saw that processors either tried to manage workforce shortages to slower throughput, or eventually actually closed down for periods of time when there were outbreaks, when they tested their workforce and found that there were outbreaks. So there was a major slaughterhouse in Germany that you probably saw about 2 weeks ago. It's only just now, 3 weeks ago now or more. It's only just starting to get back and running. But it wasn't the only one. It happened in the Netherlands. It happened in Belgium. And funnily enough, it happened in a smaller way here in the UK. It was actually a boning plant in the West Midlands that was actually closed down. There was a poultry business that actually shut down in North Wales. But if we're looking at the pig sector, it was relatively benign, if you like. The problem with the German slaughterhouse, particularly, it was Tonia's. It's the biggest one in Germany, and it meant that producers had fewer places in which to sell their pigs. And what you saw was, in a rather unique way, a disconnect between the farmer price, so the price that a producer was getting paid, because that was falling because they couldn't sell their pigs, and demand, because although demand had fallen, once supply started to tighten up, they couldn't even supply the retail market in the same way that they had done. So what you saw was wholesale prices of meat actually stayed reasonably level, and the pig price fell. If you looked at somewhere like the USA, it was even worse. What you actually saw in the USA was producer prices fell, but there was a panic in terms of their supply side. And for those of you who might have seen it in the news, you even had President Trump had to declare, he used a law that hadn't been used since the Second World War to ensure that abattoirs tried to stay open. And that caused a panic in their retail market. And if you looked at some of their key wholesale prices, I looked at over the last 6 months at the price of bellies, which is what they use for streaky bacon there, which is a really big thing there. And the price started the year, it fell by 50%. It then increased by 4 times, and then it fell back to where it started. And in fact, that's where it is. So the US has had it even worse. And then as far as Europe is concerned, export volumes to China have continued, and they've continued at very high levels, despite all the problems with COVID. And I'll show you the numbers in a moment. However, there's been a lot more competition in China from other suppliers, particularly the USA. As I said to you before, the price that producers were getting paid, and so therefore the price of some carcasses that they were going to export actually fell quite quickly. But they've also been buying much more from Brazil, who's it's a big producer, and even from countries like Denmark. And you've also seen in China a gradual recovery in Chinese production. For those who perhaps don't follow it quite as much, why is it important? Well, I'll show you in just 1 second. I'm sorry about this is rather small. I hope you can actually see it, but let me just try and draw out for you. This is what's happened in Jan to May 2020. These are EU exports, and the EU now excludes the United Kingdom, but the numbers have been adjusted for that. And you can see here that in the course of Jan to May, 5 months, the EU exported nearly 1.35 million tons to China. That was a 55% increase on the same time last year. It's a 75% increase. And China now represents 55% of all exports from the EU. But it's a 75% increase year on year. But if I draw your attention to what happened last year, we exported 2.3 million tons to China. And it was in comparison to 1.3 million the year before. So you can see that I was talking about this big increase in exports through 2019 that really pushed prices up. An increase of 1 million tons into China in 2019. And now in the first 5 months of the year, another 75% increase. The overall impact, because obviously there's been some shifting of exports. So in 2019, we saw an increase of about 14% for the whole of the EU. And that was nearly 4.6 million tons, which is a huge, huge amount. What we're seeing this year is, ignore that line in a moment, I'll come back to the United Kingdom. But what we've seen is other countries, such as Japan and South Korea, exports have fallen. Philippines is the same. And those countries, particularly South Korea and the Philippines, had been affected by African swine fever. And so have been buying, but they've been buying from other countries. And the EU has been actually diverting volumes to China and moving them away from other markets. The one difference here is there's been a 40% reduction in exports to the USA. And that's a combination of the fact that their prices are a lot lower, but also the fact that President Trump, in his wisdom, introduced 25% tariffs on a lot of product from Europe, as a result of a dispute over Airbus and Boeing. So you can see how complicated life actually gets. But this volume into China is just enormous. But as I've said, the price competition in China from other exporters is increasing, and that's contributed to a reduction in prices. As I've said, the UK market remains stable, so why should that be? Well, what's been interesting is we've seen a shift in demand from food service to retail, and that's actually benefited UK producers and processors. And the reason for it is that the food service market, which I've said is quite small, it's about 30% in the UK, that's generally lower than the UK, but it's been dominated by imports. And that's a market whereby, if you like, the imported suppliers took the food service market and we took the domestic market, particularly the retail fresh market. And because we've seen this shift from food service to retail, it's meant that we've actually seen strong demand for UK production relative to the overall market. And that's been really quite something. It's beginning to change a little bit now that we're seeing food service opening up a little. But it's been the one thing I think that's really kept our market from following the rest of the EU. There's been some disruption to abattoirs and cutting plants, but it's been pretty well managed, and it's mainly been slowdowns rather than stoppages. And our exports have continued to grow. And to give you some idea, in May, our exports to China increased by 42% in volume year on year. So we're continuing to export to China, but the prices we're getting are not as good. What's the reason for it? Well, for those who aren't familiar with this, China produces and consumes half the world's pork. So you think about that. Half the world's pork, Before they got African swine fever, they were producing and consuming, well, they were producing about 54 million tons a year. And they were consuming around about 56 million. So that compares with consumption in this country of about 1.6 million tons. So it's huge. But more importantly, what the impact that has had is because production has fallen so much and so quickly this is 2019, you can see the price used to be, this started the year, this is the price that gets paid to Chinese producers, not what we get paid when we export from the UK, but it gives you some indication. It started the year at the equivalent of about 194 pence a kilo deadweight. Because of the shortage they had, the price just took off. I mean, absolutely skyrocketed. Back end of 2019, it was way up there at around about 30, let me see, so it was just over about 37, 38 yuan. It fell back. There was a bit of profit taking. It surged again through to the new year, and then it started to come down. Now, that was because they were importing more and more meat from other people. They were beginning to release a lot more stocks, and also the fact that they were increasing their production themselves. But since, particularly since COVID has come along, and there's been a real deterioration in the relationship between China and the USA, what we've seen is prices have started to go back up again. And you're seeing the market getting pushed on. And actually now that price is getting up to here. The last 2 weeks, it's been actually increasing even quicker. But to give you some sense, that figure there is the equivalent of nearly £4.45 a kilo deadweight. That compares with prices in the UK of currently around about £1.65. So you can see the relativities are just huge. And that's why the world and his wife are exporting as much as they can to China, and will probably continue to do so for some little time yet. As a result, China will continue to drive the world meat trade, and it's not just pork. And to give you some sense as to the volumes, I know these figures are actually kind of mind-boggling, but in 1 year, in 2019, as a result of African swine fever, production fell by 21%, or 11 million tons in 1 year. EU production is around about 16 million tons. So that gives you some sense. It fell by that in just 1 year. And because ASF's not fully under control and herd building is taking a lot longer to come through, most forecasters are talking about another 4 million, maybe 5 million million ton reduction this year in 2020. And that's driving imports of pork and other meats to record levels. We've already seen record imports going into China so far this year. In response to it, China's done a number of deals with many countries, and companies, including Denmark, the USA, Canada, Brazil. The USA signed a trade deal to reduce tariffs with the Chinese, but the terms of that deal were not at all transparent, and actually we rely on special licenses being given to importers in China. And I wouldn't be at all surprised if what we're seeing in China at the moment is a reduction in imports because of the deterioration in relationship between China and the USA. And as I've said, while volumes are rising, the average price paid on imports has actually been falling, especially in the EU, because we were a very high producer. So very quickly, where does that leave us at the moment? Well, for the rest of this year and into next year, COVID will undoubtedly be a cause of volatility in the EU and on global markets. And I suspect that will continue into 2021. Its impact, I don't know what's going to happen to COVID, but I certainly know the impact on the market, because you're going to see differing rates of food service demand coming back into the marketplace. And that's going to be a key, particularly in Europe, but it's also going to be a key driver in many markets like the USA. China is going to continue to be a very strong buyer, but I think price competition is there. It's had an impact How it will continue in the future, I don't know. And it's more about politics than anything else. But we are seeing production in China beginning to recover. The reason being that those kind of prices that their producers have been paid has meant that their profitability has been extremely high. And that's just encouraged a lot of farmers back into production. And as the old adage goes, the cure for high prices is high prices. And I think you'll start to see that coming through, particularly maybe not for 2020, but certainly 2021. I think that the Chinese market will weaken off a little. However, a lot does depend on political relations with the USA. And they're difficult at the minute, and they're going to get worse. I don't think there's any doubt about it. They're arguing, the two countries are obviously at loggerheads about the origins of COVID. Now you can add into the mix what's going on with Hong Kong and what's happening with Huawei. And that's before the election really kicks off. And I think it's going to get more tumultuous before it gets better. If it does reduce trade, we know that the Chinese are looking for volume, and that could benefit others, and those others would include the EU. I don't think the prospects for the EU market to get back up to where it was, I think are pretty limited, mainly because of the way domestic demand is going. And of course, this assumes that there's no outbreak of African swine fever in continental Europe. But I think there could be some recovery in EU prices, and that would, if that takes the pressure off the gap we have between us and the rest of Europe, then that would be a good thing. I think the prospects in the UK market look good, given particularly the solid retail demand. Export volume demand is there, and we've already seen reduced imports. Those continue to fall, and mainly, as I've said, driven by the lack of food service demand. However, there are some signs at the minute, because our price premium is so high, we are now beginning to attract more imports. And you hear more and more conversations about the fact that they can buy, processors can buy cheaper continental production. We're going to be producing a wee bit more in the UK, and that might just soften up prices a wee bit. But Brexit is the big unknown, and could be very disruptive, particularly in the short term. And I'll talk about that in a second. But generally speaking, the message I think I'd leave you with is there's going to be immense volatility in Europe and in many other parts of the world. I think our market is bound to be affected at the moment by the large differential that we've got. But we've shown a very stable, resilient market. So if we do see prices weaken off, I think it'll be fairly slow. And as I've said earlier, with the exception of the fact that feed costs are rising, it should leave most producers in a reasonable position, certainly in 2020. 2021 is the big unknown, and Brexit is the key. There's a lot here, and I'll go over it because I've already been talking too long. I'll try and go through it quite quickly. The UK has stated, as you all know, that it's going to leave the single market and the customs union at the end of the transition period, at the end of this year. And it's started negotiating with a lot of countries, including the EU, Japan, and the USA. The deal with the EU is the one I'd like to kind of focus on just for the moment. Last year, the government said that it would actually reduce most of the tariffs that were currently applied, and those tariffs are big. They stop a lot of product actually coming in from the rest of the world into EU. But we said last year we'd reduce them. However, this year, after a consultation with the industry, the British government has notified officially to WTO its schedule of tariffs, and they're basically the same as the ones currently applied by the EU, except they've been converted into sterling. So what does that mean? Well, these are all wholesale rather than on producer prices. But if I was to give you some idea of the tariff on imports for a carcass under the new arrangement, if we go to WTO, is 44 pence a kilo. So you can see with a kind of pig price of about 165, an additional 44 pence a kilo that you would pay on imports would be huge. And in the absence of any trade deal, particularly with the EU, we would default to those import tariffs. So all of that product I was talking about that we import from Europe, and if you go back to that table, you'll see that actually we imported over 1 million tons into the UK from Europe last year. That will be subject, if we don't do a trade deal with them and we revert to WTO, that will be subject to a tariff that goes from 0 to 44 pence a kilo on a carcass equivalent basis. So it's huge. And if we import bacon, as you can see there, it's about 65 pence a kilo. So it's going to have a big, big impact. The UK's agreed to what they call tariff quotas, but they're really small. As I've said, we imported over 1 million tons from the rest of the EU. We have these tariff quotas at 27,000 tons. Nothing, drop in the ocean. What the UK has said is that they're not going to be introducing customs checks from January 2021, but the tariffs will still be collected, and they'll collect them in arrears. And they're introducing all the new certification from April of 2021. But that's the relationship with the EU. Of course, we are negotiating with other countries, not the least the USA. And that brings us to the whole issue of standards as well as tariffs. And again, I'll go through this pretty quickly. And I'd like to draw a distinction here between legislative standards and other standards. So the key question at the minute is, will the UK follow current EU? Obviously, if we're going to be trading with the EU, we can meet the standards, or they can meet our standards. That's nice and easy. However, in the case of non-EU countries, depending who they are, there are some considerable differences in national legislative standards. So I've got a couple of examples here. The USA and Canada, ractopamine, which is a beta agonist, which is added to feed. It's a thing called Paline in its commercial form. That's permitted, along with things like hormone growth factors in beef. Sow stalls and tethers are legal, and the famous chlorinated chicken, is all permitted. So there are some huge differences. But I would caution against it, and I'll tell you in a minute, to say, therefore they can't supply. Because many companies have already decided to produce meat in compliance with current EU standards, because they want to take advantage of, albeit small, opportunities. So there's a big debate going on at the minute. UK government has established a Trade and Agriculture Commission under the Department of International Trade. It's got a wide representation across the supply chain and consumers, and it's focusing on what standards can be applied. And they also want to look at the growth in exports. And it's due to present its recommendations, it says within 6 months. I hope I'm not being over cynical, but I suspect that other trade deals will be done by then. But it will be interesting to see what they come up. However, that doesn't mean that standards won't be applied. Commercial standards are very different, and for meat production, they often go beyond legislative standards in this country, as we well know, for things like farm assurance, etc. And that covers things like welfare traceability and, more recently, antibiotics. And larger companies, especially the larger multinational and integrated companies outside the EU, have already reacted to consumer demand, both domestically and internationally. And they've changed. I mentioned ractopamine. Yes, it's legal to produce it, but actually, because the Chinese ban it, what you've seen is that most USA pork producers no longer use ractopamine. The same is true for sow stalls. Now, that's their definition of sow stalls, so they're not exactly the same. But what you've seen is pressure coming from people like McDonald's and Wendy's and others has actually meant that they're moving towards higher welfare systems in any event. So you're seeing some of these big commercial operators who might just be prepared, even if the deal is not done and we hold out for higher standards, they may well still be able to apply. And they'll have to cope with rigorous auditing and production standards, etc. So I wouldn't just assume that that we're going to be protected from imports outside the EU based on standards, because I suspect a lot of companies will do that. So, in conclusion, there's as I've said, considerable volatility in the pork market at the minute. It's affecting both supply and demand, and it's mainly to do with COVID-19. However, the Chinese are still influential, and we've been remarkably stable, and I think that's looking pretty good. But we do need to keep an eye on what's going to happen in political developments, and even I won't try and guess. As I've said, China and the USA, that's the big one to watch, and Brexit is the major uncertainty, and it could be disruptive in the short term. What I mean by that is you could easily see a system, a position whereby if on the 1st of January we're going to impose very substantial tariffs on imports, that a lot of processors are going to do their level best to try and get as much meat from those markets as they can before the tariffs have to be applied. So it could be very disruptive, particularly if we don't get any clarity between now and, let's say, probably September, October time, when a lot of retailers and processors will be buying for Christmas and they'll be placing orders. So I think we really need to keep a very close eye on that one. If you're new to pig production, this is just very briefly, and I'll finish on this. You've got any number of ways of engaging in the marketplace. You could read them up there, but basically you could go into farrow to finish and look and try and find your own market. There's quite a considerable investment cost. You've got to get hold of feed, you've got to find abattoirs, marketing, how to market, and then you manage your risks of prices going up and down. Alternatively, you could buy in weaners and finish those. That's got lower investment costs, but you still got some of the other problems, such as feed availability, abattoirs, marketing method, etc. Once you've decided how you might want to produce pigs, then you've got some options about how you engage in the marketplace. And you can do that through a number of ways. You could join a marketing group. There's enough of them around. They are very good in terms of finding abattoir customers, and not just the same abattoir customers. They can take your pigs and move them to various places. Some can source weaners, and they can provide marketing support. Alternatively, you could sell direct. You can do that both just selling carcasses directly, or if you want, you could sell meat directly. But you need to be aware of all the things above. Plus, there is seasonality in demand. There's carcass balance that I've spoken about, so you need to be clear you can get rid of all the meat that you actually produce. And then, of course, you have costs such as slaughtering costs, etc., butchery, the whole thing. And another alternative is contract finish, which has become very popular. As I've said before, it is a concentrated industry, but a lot of that concentration is diversified, if that makes any sense, because people are using contract finishers. They're not using their own farms. And that can have a lower capital cost. If you've got the husbandry skills, you can do it. It comes with a fixed margin and thereby a lower risk. You'll get paid as long as you keep the pigs alive and keep them growing. You'll get paid a fixed fee, but you might get a lower return. Nothing comes for nothing in this world. So I hope you found that useful. There's a lot of data and a lot of information that hopefully gives you some kind of insight into how the market's shaping up at the moment. Thanks very much indeed.
Thank you, Mick. I'm going to make an executive decision about the webinar now, because I was going to take you through some slides about if you were new to keeping pigs, what you need to look at. But Mick did overrun a bit there, and it's now 7 minutes to 9. So I'm going to make an executive decision, and I'm not going to take you through the slides that I was going to show. What I will do is I'll just tell you about things that are coming up in Menter Moch Cymru. There will be further webinars. We're trying to organise the next webinar with vets, and I think it's going to be on respiratory diseases, and that will probably be towards the end of August. And then we have Nigel Pennington on the 8th of September, who's going to look at housing. So again, if you're thinking of keeping pigs on the farm, then that should be of interest to you. There's lots of information on the Menter Moch Cymru website. So if you go to resources, you can see the webinars that have happened already. These are recorded. And then also fact sheets and other publications. I'm now going to hand over to David Owen, who's going to tell us what the offer is from Farming Connect. David, over to you.
Okay, so thank you very much, Ken. Just to make double check, can you hear me now, Ken?
Yes, I can hear you.
So, yeah, much swyddog technical moch I Cyswllt. My name is David Owen and I'm Farming Connect's pig. And yeah, thank you very much. Very interesting presentation. So yeah, I'll just go quickly through the relevance Farming Connect have available, and then yeah, we'll move on to the Q&As. First of all, we have the one-to-one surgeries available. The surgeries can be an hour of one place with an experienced consultant. They're one by Farming Connect and be within an hour of the initial inquiry. Phone, Zoom, or whatever to you and the consultant's back. There's a range of different topics available. Tonight include education, planning, or
I'm afraid, David,
to the animal health.
the quality of your phone line is very poor, David.
Sorry. Yeah. Okay.
Perhaps you could just speak without sharing your screen.
Yeah. Okay. Can you hear me now?
Yeah, that's better. A lot better.
Yeah. Okay then. So yeah, due to popular demand, the animal health clinics are back, and there's £250 available for sampling or testing. All businesses need to be registered with Farming Connect and must confirm their interest before they do any testing or sampling. And testing or sampling should take place within 30 days of when the application has been accepted. Funding will be allocated on a first-come, first-served basis, and it's a maximum of one clinic per registered business. We also have the advisory service available, where there's, it's always open for a range of different testing and advice from experienced consultants. One-to-one advice is funded 80% up to a maximum of €1,500 by Farming Connect, while group advice of between 3 and 8 people is 100% funded, also up to a maximum of €1,500. And eligible businesses can apply for up to 4 instances of advice. The mentoring service is also available for up to 15 hours of one-to-one advice with experienced farmers, and that's, yeah, again, 100% funded by Farming Connect. As all on-farm events have been postponed for the time being, we've got a jam-packed programme of webinars in the pipeline, so for more information or to book your place to any of the webinars we have, please visit our website. We've also got e-learning modules available. These are excellent additional learning resources. Some of the modules we have available include pig biosecurity. So yeah, for more information on that, again, please visit our website. Any certificates or completed e-learning modules or If you attend any of our events, everything will be recorded in your Storfa Sgiliau profile. It's a secure online data storage tool for continuous professional development. And yeah, this can be used then as a tool to create your own personal CV. So for more information on anything I've covered, please contact your local development officer. You can contact me or contact our service centre. And the number to phone the Farming Connect service centre on is 08456 000 813. And yeah, I'd like to just note again that I'd like to note that you must be registered with Farming Connect to be eligible for any of our services. So to register, please visit our website where you'll find the registration form, or please phone the service centre where one of the officers there will register you over the phone. So and the number to phone the service centre again is 08456 000 813. Yeah, so that's all from me. Apologies that the internet connection here is so poor. Yeah, so diolch yn fawr iawn, and if there is any inquiries, feel free to contact me or Farming Connect.